Hi, Harry Dent here on March 7th for the Rant. Hey, finally a realistic statement from a politician. I was really glad. Scott Bessemer, who's Trump's new Treasury Secretary, okay? He basically came out in the last few days, including today, and continued interviews saying, you know, we're hooked on public spending, so we need kind of a detox period. I'm like, wow. You don't expect politicians to say this, and you notice it's not Trump saying it for sure here, but this is reality. I mean, whether you like Trump or not, he is walking into the most overstimulated economy in history, all the way back to 2008, 2009, and then COVID. That, you know, 11 trillion out of the 27 trillion I've documented just since COVID, and that's extending now. And what we really have now is we've backed off 2.2 trillion on the money printing. Okay, we basically shrunk that, but the deficits are still going full blast. Not as high as the biggest two deficits in 2020-21. That was 6 trillion just in 2 years, okay? But still, we have the deficits continuing, and this is why the so-called tightening in the last year or so has not hit the economy that hard. It only tightened the money printing and the money supply, that drop of 2.2 trillion, but the deficits are continuing to be stimulative, just not quite as stimulative as right after COVID. You know, the worst and most of that would have hit in the 2022-23. So we have this overstimulated economy, and really 2025 is the pivotal year here. If it's going to crack, it has to crack now while they're not adding to the stimulus pedal. You know, they're not stepping on the gas like they did in recent years. This is the break, and again, it's not a total break. There's still stimulus, but not nearly as much and as strong. This is the time when we should see some weakening if it's going to happen. So that's what I'm watching, and there's a good chance stocks may have peaked in December and some indices in January. And again, we're just gonna have to watch. And remember, the first crash after a major bubble like this is 40 to 50% in the first 6 to 12 months. And so 2025 should see the biggest one-year downturn we've seen in a long time, okay? Again, all we can do is watch. All of this is unprecedented. None of this has ever happened before. So we just have to look at reality and monitor what happens and gauge from there. Now, what I'd like to also talk about right now is just came back from the Tony Robbins Platinum Conference. I speak of this once a year. He has 4 of these for his best high paid members. And Michael Saylor has been at the last couple, including this one. You know, he's the head of MicroStrategy, and I'm telling you people, this is the bubble stock, okay? His company's basically biggest strategy, accumulating Bitcoin at twice the rate, 2x Bitcoin, and his stock has become so overvalued that it's valued at 3 times Bitcoin. So if you want to, I mean, Bitcoin's not a big enough bubble for you. And by the way, I equate Bitcoin with SQQQ on the short side or TQQQ on the long side 3 times, okay, the QQQ or the NASDAQ 100. So that's how volatile Bitcoin is, and he is basically valued at 3x Bitcoin. So if you want a stock that has bubbled the most and could crash the most, MicroStrategy, MSTR, is a stock to watch, and I'm going to keep watching it. Okay, first of all, first bubble back in first tech bubble, that stock went from nothing to $139 and then crashed to 14 in 2002. Okay, that was 97%. It eventually dribbled down to $3.65, down 99% in the 2009 downturn. Okay, so that was one of the big bubble stocks at the time and crashed. And now it's gone up into November 2024 peak to $474, and it's already down recently to 240-ish, okay? That's down 51% just in the first crash, and it's probably not over that. Okay, so this is again, it's a great leading stock to watch. I'm watching NVIDIA for AI, I'm watching Bitcoin for crypto. Those are the 2 leading segments, and MicroStrategy is like the most bubbly stock out there. So I'm going to keep watching all of these, okay? Now, I look at MicroStrategy stock. Next target, next real support would be 106 to 120. Well, that's down 75 to 78% from the top. And if it goes back, as I'm targeting for the whole stock markets, back to the 2009 low, which any long-term chart technical, analyst would look at, that'd be the obvious place for a big crash to go. It would go down to back to that $3.65 and be down 99%. So, folks, this is the time we're in. We're already in a bubbly era on the very predictable 90-year cycle, all the way back to the late 1830s top that crashed into 1842, the biggest bubble of the 1800s and crash, the 1929 crash into 32, the biggest bubble and crash up until now, and then this everything bubble, which I keep stating, we've never seen an everything bubble, never seen it be so global. Real estate, crypto, everything, okay? So all I can say, folks, is we know that governments have fed this bubble more than any time in history, particularly central banks. But remember, the deficits are 2/3 of that 27 trillion I've calculated, and that's going to be 30 trillion by about now, okay? 2/3 of it was deficits, okay? Only 1/3 was money printing, and they've only cut back the money printing 2 trillion, okay, out of 9, okay? So they've only tightened a little in the overall spend. So this thing crashes, there is no way to have a soft landing. They may draw it out longer. It just means it's going to last longer and take longer to get out. I tell people simple wisdom. What is your body? If you get the most toxic, if you drink poison or something, or way too much alcohol or anything really toxic, what does your body do? It flushes it out as fast as possible because it considers it a poison. This type of excess stimulus is a thing. It's a stimulant. It's a fiscal drug, a financial drug, fiscal and monetary. 27 going on 30 trillion poured into this bubbly time already on the 90-year cycle, okay? So for the greatest everything bubble in history, all I can do is say this thing looks like it's maybe topping here, and that's been extended 5 years. This thing should have seen its second bubble burst from late 2019 and late 2022 while the demographic long cycle was still down and the economy weaker. But of course, they pushed that out 5 years with this 27 trillion going on to 30 trillion. And that's just in the US, folks, okay? So again, unprecedented, but this cannot end well unless it really is true that you can get something for nothing. And I'm not a believer of that yet.